Debtbusters says that income growth has not been able to keep pace with the increase in expenditure on the basics. The debt management company also found that consumers applying for debt counselling were having to give up a significant proportion of their disposable income on servicing debt.
Incomes haven't grown, and they haven't really grown for a number of years. And as a result of that, combined with the fact that the electricity tariffs increased by double, same with petrol price, and even though inflation has eased, we still find that consumers need about 66% of their take-home pay to service their debt expenses. And in fact, depending on the income group, sometimes this is a little bit higher. So if you can imagine, you need 2/3 of your take-home pay every month to service your debt. It's not something that's sustainable.
In other economy tracking news, the BankServe Africa Economic Transactions Index, the BT, rose in October to 136.5 index points, up slightly from September's reading of 136.1 index points. BankServe Africa says the latest movement indicates growing momentum in economic activity, adding that the transaction conditions had improved, positively influencing the BT since November 2023.
There are a number of factors that are playing in positively on an economic environment conducive to higher growth levels. Amongst others, we are seeing moderating inflation, a tick down on interest rates, real salary and wage increases this year, as well as an improvement in confidence levels. I do expect that the BT will continue its upward trend towards the end of the year and into 2025, reflecting this improved economic circumstances.
Economists are predicting that the slightly improved macroeconomic conditions, namely lower inflation and the beginning of some interest rate relief, that consumers will likely be in a better position to help the economy finish the year off on a stronger note. Nampumelo Siziba, SABC News, Johannesburg.